Hi everyone! Our weekly review of the crypto market takes place amid falling stock indices and high volatility on exchanges. While equity holders are fleeing from risky assets, the crypto industry is experiencing a mass exodus of Bitcoin miners. At the end of 2022, the market marked the largest Bitcoin outflow in the past 6 years, or even on record. The main driver on the stock and cryptocurrency exchanges remains the US Federal Reserve and its interest rate decisions. However, concerns over a looming recession are now the dominant sentiment among investors, and its future localization will be fundamentally important primarily for the US dollar. If fears about a hard economic landing in the wake of Fed's actions are not justified, the US currency will attract assets from around the world. In the event of a recession in the United States, the dollar will lose its safe haven status. In this case, part of the assets can also be moved to cryptocurrency. However, the headwinds for risky assets on the crypto market became even stronger. A collapse in the Bitcoin price made mining inefficient. The borrowed equipment and rise in electricity prices only added to expenses. As a result, Bitcoin's hash price tapped an all-time low in 2022. According to estimates, all public miners sold off nearly 40,300 coins out of 40,700 mined. Core Scientific, one of the world's largest crypto mining firms, turned out to be the largest seller in the market. The crypto fear and greed index has moved further towards the extreme fear zone this week, which comes as no surprise. This zone is below the 24 mark, and the current level of 28 is already critically close to it. Although the fear index is also high in the stock market, the Bitcoin price is no longer in line with the stock market's dynamic. Moreover, in the last week of the year, traders are increasingly switching to US government bonds for security reasons. Now it's time to move on from sentiments to facts and charts. Bitcoin spent the past week trading in the sideways channel, limited by the levels of 16,576 and 16,836. Despite such a tight range, the main cryptocurrencies still extended losses. Bitcoin fell by 1.5% compared to last week, thus erasing almost all of the gains posted over the month. The lowest level on the chart was recorded on December 22nd after US statistics were released. Just at that time, the US dollar hit a one-week high, with the US dollar index rising to the level of 104.56. The inverse correlation between the main digital and fiat currencies was also observed late Wednesday when we were preparing the material for this overview. If you compare both charts, you can notice that the dollar again advanced to the same height, the area of 104.4. Against this backdrop, Bitcoin sank to 16,618 against the US dollar. It seems that the first cryptocurrency has been trapped in a vicious circle of failures this year. There is a notion that regular sell-offs and miners filing for bankruptcy have pushed the Bitcoin price below $20,000. A drop in its rate in turn has put pressure on mining, thus depriving it of significant profits. Notably, if Bitcoin kicks off the new year below the 19,422 level, it will notch the first anti-record in its history. The Bitcoin American dollar pair has been trading in a downtrend for 3 quarters, with only a couple of days remaining before the close of the fourth one. Moreover, this scenario is highly likely. According to the trading chart, even the 17,000 mark seems to be an inaccessible peak. It looks like Bitcoin is set to begin the new year in a bear market. Thus, 2022 will be a losing year for most crypto investors. The current year can also be regarded as a losing one for the CEO of crypto exchange Paxful. According to Ray Youssef, Ether is no longer a full-fledged cryptocurrency. The owner of the company announced that the platform would remove Ether from the exchange on December 22nd. Among the reasons for such a move, the head of Paxful notes the Ethereum network's recent switch to proof-of-stake algorithm, which has deprived Ether of its unique features. Ray Youssef believes that the second largest cryptocurrency by capitalization has rendered Ether essentially a digital form of fiat controlled by a small number of people. Ether spent the week moving in the range of 1,190 to 1,218 tokens per dollar. The low was recorded on December 22nd. However, this fall was hardly due to its removal from the Paxful platform. After all, Bitcoin dipped around the same time. Moreover, Ether slid to the area of 1,195 on Wednesday, also following the main cryptocurrency. This means that digital currencies directly depend on the US dollar, which confirms an inverse correlation between them. Thus, major cryptocurrencies spent 2022 in a year-long downtrend. However, the crash dashed not only the hopes of crypto investors for heavy profits, but also affected large crypto projects and their leaders who had been atop the rankings until recently. In June, Forbes ranked the most innovative private fintech companies in 2022. It includes 9 cryptocurrency projects. Crypto exchange FTX turned out to be the leader on the list. Non-fungible token marketplace OpenSea and blockchain platform Alchemy took the second and third spots in the ranking respectively. 6 months later, the founder of FTX was indicted on 8 criminal charges, while the leaders of Alchemy were arrested. Now FTX Sam Bankman-Fried tops the ranking again. This time he received the highest score, 10 of 10, on Guardian's list of the worst tech CEOs of 22. Terranos founder Elizabeth Holmes got the same number of points. She was sentenced to over 11 years in prison for defrauding investors. In this light, there is no doubt that the coming weeks will be full of headlines in the media about the need for global regulation of the cryptocurrency industry. So there comes a post-FTX world. Well, that's all. We hope you enjoyed it. We are looking forward to your comments on this video. The InstaForex TV team wishes you a festive mood and profitable trades. See you in 2023.